What's on? I'm Shani. Good afternoon, everybody. Let us do this is this year's paper, May 2024, paper one. So we've got information relating to Shah Soda, and this is question one. It's all about inventories and VAT 14 marks, 24 minutes. Always try by all means to stick to the time limit, no matter what. So they say that Shah Soda is a local company that sells personalized bottled cold drinks to companies and schools. A unit consists of one bottle of cold drink and the personalized. So they use periodic inventory system for all stock. Now, when they tell you that they use periodic inventory system for all stock, they're simply telling you that when you calculate cost of sales, you must use that formula. Remember that formula that says we have opening stock plus purchases minus returns plus carriage on purchases plus custom duties, you minus closing stock. Do you remember that formula? That's what they want you to use when you calculate cost of sales. Immediately when you see periodic inventory system, they just want you to use that formula to calculate cost of sales. That's it. Now, they are a registered vendor, all right, tax vendor on the invoice-based method. That tells you that, well, I always say to my kids, for IEB, they always use invoice-based. They never use cash-based. Invoice-based means you calculate VAT when you sell. You calculate VAT when you buy. You calculate VAT whether you're selling for cash or credit. You calculate it when you issue that source document. Note that the source document you issue when people buy for cash is a receipt, or you basically use the bank statement if they bought using their credit card or simply any card payments. So you will use your bank statement to get that information. But if you sold goods on credit, you will use the invoice as which is credit sales invoice as your source document. So immediately when you issue that invoice, when you issue that source document, that's when you calculate that. Got it? When you issue that invoice, or when you receive an invoice if you bought goods on credit, or when you issue a credit note. Basically, we don't calculate VAT when our debtors start paying us. We calculate VAT when we issue an invoice from the initial purchase. That's what they're trying to tell you when they say it's invoice-based method. So immediately when you receive the source document or when you issue the source document, that's when you calculate VAT. Grade 9, sorry. That's where you learned about the source documents and all of those things, okay? Now, they told you that VAT is calculated at 15%. The following transactions were taken from the accounting records of Shah Soda for the year ended 28th of February 2023. On the 1st of February, which is the beginning of the month, the SARS VAT account had a credit balance of 7,500. Now, when SARS VAT has a credit balance, it means that we owe SARS. That is a VAT output. So at the moment, VAT output sitting in under SARS VAT is 7,500. So that's how much we owe SARS at the moment towards VAT. You got it? We good? Right. So now we need to determine whether this VAT output is increasing by any of those transactions we have 1 up to 4, or it'll be decreased by any of those transactions from 1 up to 4. And that's what we will be analyzing. Let's go to the first one. The total purchases of ice was 13,000 Rand exclusive. When they say it's VAT exclusive, it means VAT was not included. So that 13,000 is at 100%. Note that in all of these questions, you're not interested in anything except for VAT. So we need to calculate VAT on that 13,000. Since it's VAT exclusive, you are going to take that 13,000 Rand multiply it by 15 and divide it by 100. But before we get there, I nearly showed you the answer here as how I analyze it. From purchases, note that VAT involved will be VAT input. Automatically, VAT input reduces that 7,500. It's a reduction of VAT output. So we're going to take the 13,000, multiply it by 15. We want 15 out of 100. That 13,000 is at 100% because no VAT was included on that. You will get 1,950, 1 mark for that. And as I've said, it's VAT input. It will reduce your VAT output. VAT output is reduced by VAT input. Got that? Good. Let's move to number 2. In number 2, they say the creditor who was owed 6,440 granted 7.5% settlement discount when the account was paid. We owed this person 6,440, right? That's how much we owed this person. But they decided to grant us a discount. Note that when we buy, because we buy from a creditor, when we buy anything we bought from a creditor, VAT on that thing that we bought will be VAT input. Whenever we buy, VAT on that item will be VAT input because we can claim it back from SARS. Note that when we buy an item, VAT is included in that. And whoever we're buying from will take that VAT and pay it over to SARS. We are allowed to claim it back from SARS. But now, that VAT we are allowed to claim back from SARS was overstated because it was calculated on that 6,440 when we received that invoice, because we bought these items. So when we received that invoice on that 6,440, they calculated VAT on it, and VAT on that was VAT input. And that was wrong. We were not supposed to have calculated VAT on 6,440. We were supposed to have calculated it on 6,440 less the 7.5%. So basically, we were supposed to have calculated VAT on this value, which is our VAT input. Our VAT input was supposed to have been on this value. It's 6,440. Obviously, this is VAT inclusive. It's VAT inclusive. It's at 100%. But I just want to show you what we were supposed to have calculated VAT on that at. So you will take that 100% minus 7.5% equal sign. Okay. Obviously, this is VAT inclusive, but I just want to show you that the VAT that we calculated on 6,440, well, it was on that, and it was supposed to have been on a lower amount because we were granted a discount. Do you guys understand that? So we overstated our VAT input. We need to reduce this since we have been granted a discount. So what are we going to do? Since that 6,440, VAT on that was VAT input, and that VAT input has been overstated by the VAT of the discount. We're going to calculate the discount first and then calculate VAT on that discount. And VAT on that discount is supposed to reduce our VAT input. And when it reduces our VAT input, it increases our VAT output. Any reduction of VAT input means it's an increase of VAT output, because I explained to you earlier on, VAT output is reduced by VAT input. So reduction of VAT input means VAT output is increasing. You got that? We good? Technical, right? Let's get into it. So what are we going to do? Discount received is basically income, okay? VAT, this is how I teach my students when I don't want to be too technical, because probably some of you didn't understand what I've just said. It was too complex for you. But if you understand it, well done. Okay. I try by all means to make sure I break things down for you. So the discount on purchases will be discount received. And discount received is income. VAT on income is VAT output. So that's how I make it easy for my students. All right. So I'm going to take the 6,440, calculate the discount on it by taking it and multiplying it by 7.5 divided by 100. It'll give me 483. Then I will take this 483 because it's VAT inclusive. How do I know it's VAT inclusive? Because that's what we pay. That's how much we owe the creditor. We will owe the creditor an amount that is VAT inclusive unless the transaction tells you otherwise. So I'm going to multiply this by what I want. I'll always want 15 when it comes to VAT, but I have to divide this by 115. Then I will get my VAT of 63 Rand. As I've said, VAT on income is VAT output, meaning VAT output is increases. This is what we owe SARS. This is me not wanting to be too technical. Okay. But I tried to break it down by explaining everything, and I hope you got that. But if you didn't get that, just understand, and you understand this, we all good. Remember, the main point is for you to get marks. Let us move on. It says that an amount of 2,760 was recorded as an allowance. I'm pausing there. There's no comma. There's no full stop because that is key. Highlight it. So it is an allowance made to a debtor. An allowance you need to understand is debtor's allowances, which is an expense. So VAT on debtor's allowances will be VAT input. Do you get it? Good. Now, and the VAT of 360 was recorded as such. So the debtor retains goods, and then we recognize VAT of 360, which is VAT input. Understand this, when we sell goods to a customer, we sell them at a price inclusive of VAT, right? And VAT on goods we sell to a customer will be VAT output. So when a debtor returns the goods, it means that that VAT output has been overstated. We need to reduce it by the VAT amount of goods returned. Therefore, when goods are returned to us, not us returning goods, it's the debtor returning goods to us, VAT on those goods will be VAT input. It's just a reduction of the VAT output that we initially recognized when we sold those goods. We good. You sure? Great. Now, what we did is that we reduced our VAT output by 360. We reduced our VAT output by 360. We good. Because that 360, it represents the VAT of the goods that were returned to us. Right. Let me continue. And then it says, on investigation, it was discovered that this was in fact a trade discount that was granted and should have not been recorded. Did you get that? So what happened here is that we granted a debtor a trade discount. We good? And when we grant a trade discount to a debtor, it actually reduced our VAT output, which was 100% correct. But now, later on, when this debtor returns goods, we recognized VAT input. Got it? So the VAT input that we recognize, we actually were wrong. We were not supposed to have recognized it. So all we have, why don't are we not supposed to have recognized? Because we thought these were goods or allowances from that was given to a debtor, but no, it is us that actually forgot to record it as a trade discount. Actually, it was discovered that in fact this was a trade discount that we did not record. It's a bit too much, right? I know. All right. Let me try and make it easy for you. So when we sold goods to a customer, we recorded those goods at a price excluding trade discount. And that was correct because we don't record trade discount. However, later on, I don't know how we lost this information. The same trade discount we mistakenly recorded as an allowance. And immediately when we record it as an allowance, it gives rise to VAT input. So basically what happened is that everything was recorded correctly. And then we did a wrong thing by recording the allowance, kicking in VAT input. And that was wrong. So now we need to correct the mistake we made. Do you get that? So how do we correct the mistake we made? We first have to figure out what the mistake was. So what was the mistake? Okay, I don't know why it's taking me back, but this is what the mistake was. We decreased. So basically what happened is that when we recognized debtors allowances, we recorded that input on it. All right, I think I have explained enough. Now note that debtors allowances will result in VAT input as I have explained. So VAT input will reduce VAT output, which is what was done, but that was wrong. But we recorded it, and that's a problem. To reverse this, we are just going to correct it by noticing that a trade discount will result in VAT output. So a trade discount should result in VAT output or reduction of VAT input to reverse what has happened. And obviously we'll have 360 as our VAT, and our 360 will increase VAT output. That's what will happen. It'll just increase VAT output. We good. All right. Moving right along. Let's go to the last one. It says that a debtor who owed 3,680 was written off as irrecoverable. Bad debts is an expense. Expense will result in VAT input. Okay, this is for those that just wanted to pass. But I'm sure there are those that want to know why. Note this, when we sold goods to this debtor, what type of VAT did we recognize? Output. So it makes sense when we write off the debtor, we do the reverse, which will result in input. Or you can call it a reduction of VAT output, it's fine. So how do we calculate it? Because we sold goods to this data, we included VAT in there. So to calculate VAT, we'll take that 3,680 multiplied by 15 divided by 115. It'll give us our VAT amount of 180, which is VAT input. It reduces your VAT output. All right, I hope everything was thoroughly explained to you, and I hope you enjoyed the lesson. Please don't forget to like, subscribe, and I will include a link under description to a group. It is Google Classroom where you can access this paper. All right, and I hope I clarified everything. This was written this year. Thank you again for your support. As you watch all my videos, please don't skip the ads. When the ad is playing, just go to the bathroom or do something, go drink water. And yeah, thank you. Remember to like and share with your friends. And as I said, guys, tell me. I know that the nearest schools around here is Sunward Park, and I also have Windmill Park. I also have Villa Lisa. I'll be free during the August holidays, and I would like to come and just do a bit of revision with you guys. Um, let me know. Let me know. Okay, talk to me. You can send me a WhatsApp or just inbox me on LinkedIn or Facebook, and we can arrange how I get to your school, right? The closer, the better, I think. What else do we have here? We have St. Dom's, we have CVC, but those are private schools. I really, really need um, to go to a township school. It's for free. I'll just come and teach you guys either maths or accounting. So let me know, okay? Holla at me. Thank you for watching again. Khozo.